Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. See, there's a difference between a day trader and an investor. A day trader usually wants to pump a stock. An investor looks for intrinsic value, like the great living legend Warren Buffett. He always looked for undervalued stocks that he could buy into at a bargain price, understanding that with time, those stocks will generate huge profit margins for him and revenue. The undervalued powerhouse poised for a breakout is NIO. In the high stakes arena of electric vehicle manufacturing, investors, not day traders, are constantly, searching for the right balance of growth, potential, and value. While names like Lucid and Rivian often dominate headlines, a closer look at the hard numbers reveals a startling disconnect. The data from the first half of 2025 points to one clear conclusion. NIO is not just keeping pace, it is dramatically outperforming its peers on a fundamental level. Yet its market cap suggests a significant undervaluation. But I spoke about this before. Once NIO becomes profitable, not long after that, if you use history as your teacher, you will see where the stock price will go. Let's break down the figures that tell this compelling story. Dominance in delivery volumes. The most critical metric for any automaker is unit sales. And I remember when the shorts used to say, show me the sales. Well, now I can show you, boy. And here NIO operates in a completely different league. NIO, 42,094 vehicles delivered in Q1, skyrocketing to 75,056 in Q2. This represents a staggering 71% quarter-over-quarter growth and an annual run rate approaching 500,000 vehicles. Rivian, on the other hand, delivered 8,640 units in Q1, growing to 10,661 in Q2, a 23% growth. But notice our delivery numbers compared to theirs. Lucid reported 3,109 and 3,309 deliveries for Q1 and Q2 respectively. Yes, you heard that right. Showing minimal sequential growth. NIO's Q2 delivery number alone is more than double the combined deliveries of Rivian and Lucid for the entire first half of the year. This isn't just a lead, it's a demonstration of scale and market acceptance that is Western competitors have yet to achieve. The stunning valuation disconnect, this is where the investment thesis for NIO becomes undeniable. Despite its colossal delivery advantage, look at the market capitalization as of August 28, 2025. Rivian 16.4 billion, NIO 13.23 billion, and Lucid 6.39 billion. NIO, the company delivering over 114,000 vehicles in 6 months, is valued at a discount to Rivian, which delivered under 20,000. This creates a profound valuation gap. Investors are paying a premium for Rivian's potential in the North American market while assigning a lower multiple to NIO, which is already executing at mass scale. Why NIO is positioned for a re-rating yet again? This valuation disconnect cannot hold forever, and we know that because we use history as our teacher, because we're investors, not day traders. Here's why NIO is poised for a major re-rating yet again. Proven scale and ramp-up, NIO has moved beyond the potential phase. Its production and delivery figures prove it has solved complex supply chain and manufacturing challenges that still plague newer automakers. The explosive Q2 growth indicates strong operational execution. Now imagine what Q3 holds. A superior ecosystem strategy. NIO is more than a car company. Its innovative battery as a service and extensive network of battery swap stations create a recurring revenue stream and a significant competitive moat. This ecosystem locks in customers' loyalty and addresses the critical issue of charging time and battery degradation. Strategic global expansion. While firmly established as a premium brand in China, the world's largest EV maker, NIO, is methodically expanding into Europe and other international markets. This global footprint diversifies risk and unlocks immense future growth avenues. A more compelling growth story for investors seeking explosive growth, NEO's 71% quarterly delivery surge is a powerful signal. It demonstrates strong demand and the ability to capitalize on it. A narrative that is far more concrete than promises of future models and production. So yes, we don't have to pump the stock to get to 100. It's going to get to 1,000. It's a blue chip company in the making. But a day trader cannot understand that. Only investors can. The bottom line. The data represents an undeniable picture. NEO is delivering vehicles at a rate that dwarfs its well-known competitors, yet the market is valuing this execution at a discount. This creates a rare opportunity to invest in a company with both hyper-growth characteristics and a deeply undervalued stock. While Rivian and Lucid burn cash to build scale, NEO is already there. As the market corrects this mispricing and begins to fully price in NEO's scale, technological leadership and global strategy, the upside potential for investors is substantial. NEO isn't just an EV play, it's a clear case of market leader trading at a follower's price. So I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit the thumbs up and hype it. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.